It for investment, that means it is equal to business use. To an unrelated party in exchange of an office building. So we say, okay, there is an apartment building versus office building, like kind exchange. We are not going to talk about the use. At the time of exchange, the apartment building had a fair market value of 60 and has an adjusted basis of 50. Okay. The apartment building was subject to a liability of 50. That means this was mortgage, which Rohan assumed for legitimate business purposes. Okay, now guys, always remember that in real life, nobody is a fool. So in real life, what is happening? He's giving you one building, and that building has a basis in his books of 50. The fair market value was 60. And he's also transferring a liability to you. Okay, so basically, what you are giving me is worth $45,000 in today's world. So what I did, I am giving you something which has a market value of 40. So this is J and this is R. So what is R giving you? Something which has a market value of 40, another building. That is why R also agrees to give you 5,000 in cash. Does this make sense? In real transaction, are you seeing what is happening? I am taking something worth 45 and I am giving you something worth 45. But how to solve this? The way you're going to solve it is step by step. So what is step one? Can I remove all of this, guys? What is step one? Step one is you calculate the amount realized. What is amount realized? Okay, I look at it. The amount realized is very simple. The amount realized is the fair market value of property received, which in my example is $40,000, plus boot received, when my example is $5,000, plus the liability transferred or the net relief from liability, which is $15,000. So basically, it is $60,000, which is my amount realized. Do you all agree, guys? This is making sense? Yes or no?
Yes.
So what is my amount realized? Everybody, is this clear? So this is my boot cash received, and this is my liability transfer. So this is my net relief of liability. So both of them becomes boot. So this is boot received. Then I calculate, okay, what is the adjusted basis of the property? So we say, okay, the adjusted basis of the property is what? The adjusted basis of the property is always for property given up. So given up is 50. So adjusted basis is 50. Then we say, okay, find out the amount of gain realized. We say, okay, the amount of gain realized is amount realized, which is 60, minus the adjusted basis of asset given up, which is 50. So my gain realized is 10. Then what do? We say, okay, go to step 4. What is the gain which is recognized? The gain recognized is the lesser of what? It is the lesser of what? One is the gain realized, which is 10, or the boot received, which is 20, whichever is lower. In our case, it is $10,000. Can you understand what is this? So what is my recognized gain on this exchange? The answer is $10,000. Is this clear? So the first question you're going to ask yourself is it real property? Both of the same properties have to be in the United States. It cannot be with UN and outside United States. Second question you're going to ask yourself is the exchange a like-kind business exchange? The property kind should be same. You cannot have a building with a furniture. You cannot have building with plant. Okay, so remember that. If it is like-kind, then you have to apply the steps and then use it accordingly. Is this clear? Any questions?
Can we do some more questions?
Yeah, we'll do it.
Okay.
Okay. Bhavya, your turn. Read the question.
What is R's recognized gain on this exchange? R transferred an apartment building she held for the investment to M in exchange of land moving equipment. The apartment.
Stop. Is it real property?
No,
She is exchanging real property, but she's
but
not
not
getting real
exactly
property.
the same.
No, she's not getting real property in exchange. Yes or no?
Yes.
She's exchanging a real property, but she's not exchanging it with another real property. So is it a like-kind exchange?
No.
So remember, if it is not a like-kind exchange, everything will be at a fair value. Okay? Now read.
The apartment building was subjected to liability of $20,000, which M assumed to be legitimate business purpose. The land moving equipment had an adjusted basis of $40,000 and the fair market value of $70,000. The apartment building had a fair market value of 1 lakh and the adjusted basis of 60. R received 8,000 in cash in addition to the receiving the land moving equipment.
Okay, what is amount realized? Amount realized will be the same, right? Whatever you're going to do, like or unlike. What is he getting? He's getting something which has a fair market value of 70.
8,000.
He's also getting cash of
8,000.
8. And he's also getting a relief from liability, isn't it?
Yes.
How much? 20.
20.
So 98,000 is the amount that he is getting. For what? For his building which had a basis of
60,000.
Always understand that what you calculate is something which has the asset given up. So basically the entire gain of $38,000 will be offered for taxation. Do you agree?
Yes.
Is this clear?
But the
How
fair
do-
market value is 1 lakh.
This is of the property given up.
Yes.
But when I'm calculating the amount realized, I will take it of the property received, isn't it?
Okay.
Okay, real life में देखो क्या हो रहा है? Real life में he is giving something worth 100 minus 20, 80. Yes or no?
Yes.
80 का सामान दे रहा है. सामने वाला
हाँ.
क्या दे रहा है? He's giving you an
70 का.
equipment with a fair market value of 70.
हाँ.
और
And
उसके
plus
साथ साथ
8,000
उसको
cash.
कैश दे रहे हैं.
हाँ.
Yes.
Yes.
So basically what they are saying is ये तुम जो 80 बोल रहे हो, I'm not going to give you 80, I'm actually only giving you 78. So you're going to take as if you're receiving 78. Is it clear?
Yes.
Is this clear?
हाँ हाँ हाँ.
इसको हम लोग हटा के 78 कर दे रहे हैं.
Okay.
This is what we are doing.
Got it.
Is it clear?
Mm-hmm.
Okay. 14 number karo chalo. Do this question. This is Bhavya. No. Did you do the last one?
Yes, yes. I will do mine.
हाँ Anuj, बोलो.
What is the basis in the new warehouse? J exchanged his warehouse with an adjusted basis of 80,000 for a new warehouse with a fair market value of 70,000 and 20,000 cash. Both warehouses
Basically, what is he receiving? What is he receiving? Something worth 90.
90,000. Yes.
So basically, the X amount realized is 90, right?
Yes.
Minus the asset given up is 80.
80.
So is
So
gain
10,000.
recognized? This is the
Yes,
gain
10,000.
realized. What is the boot received?
Both warehouse are used. Boot received 20,000 cash.
So what is the gain recognized?
30,000.
No,
Sorry,
it is
10,000.
a lesser. It is a lesser of the two figures.
10,000.
So tell me, what will be the basis of the new warehouse? How much gain will be recognized? This we know is 10, right?
Yes.
What is the basis of the new warehouse? Basis of the
80.
new warehouse is basically rollover हो रहा है, देखो. It's a property, new property that you have taken minus the gain that you have deferred plus the loss that you have deferred. Basically $80,000.
Got it.
Is that clear?
Yes. B is the answer.
14, right? How much is the gain deferred? Oh. How much is the gain deferred? Wait. Full gain
I'm
realized
lower.
is 10. 0, 0, 0. See, what is the gain that you're deferring? 0, isn't it?
Yes.
See, what is the mistake that I did? What is the basis of the property? You remember what we told you? Look, dekho. What is the basis of the property? The basis of the new property acquired is fair market value of the property received minus the gain that you have not used and plus the losses that you have deferred. Okay? Now, in this example, what is the fair market value of the property received? It is only 70. Yes or no?
70.
So and what is the gain that you have deferred? The entire gain was 70 and you've recognized full 70, isn't it?
Yes.
So fair market value of new property is 70. I had a gain of 10 and I recognized full 10 because my boot was more than that. So minus the deferred gain is 0. Yes or no?
Yes.
And no losses were deferred, so this becomes 0 anyways. So the basis of the new property is 70. Have you understood this?
Okay.
So my gain was 10 and the basis was 70. Bhavya, Moses, is this clear?
Yes.
Okay. Now this must have been looking really overwhelming. Moses, is this clear? Okay. So this portion here is a little mechanical, guys. Okay. My suggestion is go step, even if you know or don't know things. Okay. My suggestion is for this, go step by step. Okay, because otherwise this gets a really complicated stuff. Some examples, they may be boot paid. Some examples, they may be boot received. Okay, so we've put it in a very good hierarchy. First, find out how much boot you're receiving and paying. Then calculate your amount realized. Calculate the adjusted basis of the asset given up. The amount realized minus the adjusted basis gives you gain realized. Find out the lower of gain realized or boot received. The lower of the two figures will be gain recognized. So if you have realized more gain and you've recognized less gain, there will be some deferred gain. So adjusted basis of the new property is the fair market value of the new property minus the gain that you're deferring plus the losses that you have been deferring. Is that clear?